Welcome to the C-Suite Series presented by Channelchek and Noble Capital Markets. Noble is an SEC-registered, FINRA-licensed broker-dealer and the source of the equity research available on Channelchek. Of the 6,000 small and microcap companies listed on the site, today we're featuring Gray Television. Michael Kopinski, Noble Senior Research Analyst covering the company, will be interviewing Chief Financial Officer Jim Ryan and Chief Legal and Development Officer Kevin Latek. As a reminder, Michael's research is available at no cost on Channelchek. Just type in Gray Television in the top left Company Data section. And now, here's Michael, Jim, and Kevin.
Well, I'm very excited to have the management of Gray Television, one of the premier television broadcast companies. Gentlemen, welcome. Before we get started into the corporate strategy at Gray, let's chat a little bit about your backgrounds. And Jim, I know you're dialing in. We don't have your video, but you have a long history as a CFO in the broadcast industry. Can you talk a little bit about your background and how you got started in the business?
So I've been with Gray for 22 years now. I actually came to the company, as we kind of joke, as part of an acquisition when Gray bought the old Bussy Broadcasting back in 1998. I actually got involved in broadcasting in the mid-'80s as an accounting manager at what was then the ABC station in Rochester, New York. So I've been around the industry for a reasonably long time now.
And Kevin, you had an interesting background with a law degree and various roles before you joined Gray. Can you talk about your background and what brought you to Gray Television?
I spent 15 years at a Washington law firm that represented broadcasters, media companies, internet companies, and I concentrated on television broadcasting, primarily in the programming area, so network, retrans, LMAs, SSAs, things that have obviously become much more important over the years.
And Jim, you mentioned that in your background you had a stint at Busey Broadcasting, which had a troubled past before it was acquired by Gray. How did your experience there frame your management operating strategy at Gray?
Actually, even though Bussy was a very highly levered company at the time, the operational strategy was very consistent with what the operational strategy at Gray has always been. We always managed the company for the long term, taking the long-term view on what was best for the operations, and that's what we've been doing at Gray for a couple of decades or longer.
Right. Up until fairly recently, Gray was largely viewed as a regional broadcaster, but the company's most recent acquisitions have placed it among the top tier of the national group television owners. And acquisitions, as you mentioned, has always played a place in Gray's history. But why did the company step on the M&A accelerator, so to speak, most recently?
So in November of 2013, we did our first acquisition since the financial crisis. Really, we were confronted with the same issue that I think all broadcasters other than Nexstar and Sinclair at the time had confronted, which was we decided that we either needed to get larger or we needed to sell. The standing still was not the right option given the dynamic change in the broadcast business and media at large. And we chose to go larger. And since November 13, we've done something in the order of 3 dozen acquisitions. Most notably was the acquisition of Raycom Media, closed the 2nd of January 2019, so $3.6 billion, that doubled the size of the company. So I'm saying when I joined the company was before that started. So pre that acquisition, Gray was in 30 TV markets. Today we're 94.
And one of the hallmarks of Gray has been that while it has been acquisitive, it's maintained a relatively conservative balance sheet. And you stepped up with the Raycom acquisition, as you mentioned. But as you look back, do you regret not stepping up a little bit more aggressively in the past? Do you feel like you may have missed out on some opportunities with the strategy that you've had?
Yeah, we can always second guess and say, I wish we had acquired that, I wish we'd acquired this. The reality is there is no must-have TV station. There's no must-have market to be in. We're aiming for quality TV stations at the right price. If we had proceeded with a couple acquisitions that with the pricing just got to be too high or started our acquisition spree before we had gotten our balance sheet in order, I think we would have paid the price in the equity markets. quite a while. So I like to think that people consider Gray as being singularly focused on broadcast TV and number one, number two TV stations, and not trying to get into new industries and not trying to go far afield, but also that we've maintained a pretty disciplined approach. Other than Raycom, if you line up those other acquisitions, our buy-side multiple, which necessarily includes our synergies, our buy-side multiple is a little under 7 times broadcast cash flow. Raycom is obviously a bit larger than that, but that was a very, very large transaction that doubled the size of the company. Some of our deals obviously were above 7, some below, but we don't stray too far above that. So if we had done another deal, it would have taken our multiple much above our comfort zone. It would have would have impacted us adversely, and that probably would have prevented us from moving forward with some other acquisitions that came down the road later. So all in all, we don't need to revisit the past. We don't, there's some markets we kind of would like to be in, but there's nothing critical. We've got a great presence in 94 markets. We're continuing to look to grow. I think we will continue to grow, but we're very happy with the portfolio that we've acquired.
There have been some pivotal moments in the history of broadcasting, back with the rise of the cable networks in the 1990s. It caused the TV industry to struggle at a time when there was a great deal of acquisitions and the prices for TV stations rose significantly. And then some highly leveraged companies didn't quite make it. Now the industry has a lifeline with retransmission revenues beginning in 2005, and it brought a new era of revenue growth to the industry in spite of some stiff competition from the internet. Where do you believe the industry is at in terms of retransmission revenues, especially now that we're seeing some weakness in cable subscribers? Are the OTT platforms taking up the slack? Just kind of your thoughts on retransmission revenue.
Sure. Obviously, retransmission revenue has grown very dramatically over the last 10, 12 years. We started off getting virtually nothing in terms of compensation for our signals. And the programming pie was obviously much smaller, but it was entirely going towards cable channels. Now, fast forward 12 years, our take as an industry has gone up dramatically, but we're still at somewhere under 20% of the total programming pie. So stated differently, the MVPDs and the OTTs are paying an enormous amount of money for programming, and we're only getting 20% of that. That seems bizarre in a world in which all broadcasters' rating points in the overall pie, we're contributing about 40% of the total rating points. But more importantly, the intensity of viewership is off the charts, right? So you can have lots of shows with very low ratings and not really have anybody particularly passionate about your programming. Broadcasting is the opposite. Of the top 100 shows on TV every season, about 95 of them are broadcast TV shows. The intensity of viewership is on our side. That's why when we have disputes, we see disputes between cable channels and MVPDs, the cable channel goes dark. It's very rare that you see subscribers go down for that MVPD, whereas if you take a broadcaster off, there's a pretty quick, sometimes painful impact on subscribers. People will change their platforms at their local TV stations, and the broadcast networks are not being carried. You don't really see that with most cable channels. So we're getting less than half of what we're contributing in terms of ratings. We're getting surely far less than half of what we're contributing in terms of the intensity of viewership. And certainly when you look at the small markets, when you look at the local market ratings, not national market ratings, local TV stations dominate the ratings. In any given market, the number 1, number 2 TV station will have higher ratings than pretty much every cable channel combined, though the number 4, number 5 ranked TV station typically has more ratings than any individual cable channel. So we should be getting far more than 40% or even 50% of the programming pie. So where are we in that? We're obviously not there yet. We've got a long way to go. But I don't think getting to mere parity with our rating points, which would be a doubling of the retrans revenue, is anywhere near where we would stop. Again, because of the intensity of viewership, the loyalty our viewers have, the amount of viewership that we have, especially when you start looking on a local cable system level or an OTT offering in a particular market, people are watching the local stations far more than they're watching cable channels.
And the conventional wisdom was that the industry needed to get bigger to have a seat at the retransmission negotiation table for the satellite and cable companies. But how important is size when negotiating for network comp? Are these negotiations based on local ratings, or are they based also on the value that you create from having a large network affiliation group?
I think scale is helpful on both the retrans negotiation and the network side, but it's not necessarily horizontal scale. Gray only reaches 24% of the U.S. now. Until Raycom, we only reached about 10 or 11% of the U.S., and our rates were pretty competitive by every third-party measurement. And that's because our scale is very deep on a vertical basis. Within our markets, very, very strong loyalty, service to local communities, and again, intensity of viewership is very high in our stations. And that translates, I think, into not just retrans and network, but really conversations with any vendor. People want to be associated with the number one station, and Gray has the best collection and the largest collection of number one stations. So I think scale is important, but scale is not necessarily only horizontal. Certainly, I think we've proven that vertical scale can be just as important as having eyeballs at 30 or 40% of the U.S.
It seems like the networks have also kind of aggressively gone after the broadcasters for the reverse network comp, and this clawback that we're seeing at a time when we're starting to see a little disruption on the cable subscription side of the biz. To what degree do you think the networks, to what degree would you hold the network's feet to the fire in terms of ratings performance for the content that you're getting from them? And when do you think that they kind of back off a little bit, or will they back off a little bit in terms of trying to claw back what you're gaining from the retrans side?
I think it's a different conversation with each network and for each station. We have stations where the retrans is being paid almost entirely because the value of the network content in our local station is not contributing much. Those would tend to be a startup network affiliation in a market which used to have an imported signal, for example, so we don't have much on it. The vast majority of Gray stations, though, are number one TV stations where our local news does better than any program on network, including sports. So the value proposition in those different types of TV stations really is different. And so the answer is sort of where do you push back? The answer is you got to find the right equilibrium based on the set of assets which you're negotiating for. We have some stations that, again, retrans is getting paid because the MVPDs don't want to lose our local news. In other cases, the MVPDs are paying because they don't want to lose network content. So we have, obviously, like every broadcaster and every network, pretty heated discussions about where the value lies. And at the end of the day, we define a number that works for them and a number that works for us.
Where does Gray turn toward for future revenue growth? And we'll get to political in a second. But do you turn to digital? Do you turn to content? Or does the new broadcast standard that the ATSC 3.0 offer compelling revenue opportunities? And maybe you could talk a little bit about the new broadcast standard and what your thoughts are, if there are some promising revenue opportunities with that.
Yeah, so first, I mean, digital is everyone knows digital is growing quickly. We're selling OTT ads now, which we weren't doing a year ago. Our apps and websites have seen just tremendous traffic, as you can imagine, going even before COVID. January, we set an all-time record for viewers, users, page views, you name it. And COVID just accelerated all of that digital viewership and usage. And it's frankly, it's continued to be pretty strong throughout the year. So we're definitely seeing some growth there now. The numbers are obviously much smaller than what we get from the linear advertising. The next big movement for the broadcast industry is going to be the transition to the new broadcast standard, ATSC 3.0. The current standard was adopted a couple of decades ago. That's what gave us high definition signals and the ability to multiplex our signals so we can broadcast multiple channels within one 6 megahertz license. And 3.0 will allow us to greatly increase the throughput so we can broadcast ultra high definition signals, multiple high definition signals, and additional content. It's an IP gateway, so we can zone signals, we can send location specific ads, location specific programming. It's a two-way product, so we can also have, we can also use paywalls for additional content or enhanced content. And this content, because again, this is just an IP system, all content does not need to be video programming. So we also have, with 3.0, the opportunity to provide a very cheap and efficient way of transmitting data over long periods, over long distances, much cheaper than using the traditional 4G network. So with all that, there seems to be a no endless number of things we can do with 3.0. The challenge is rolling it out. So 3.0 started just now rolling out across the country, and the hope is there'll be roughly 3 dozen markets with at least one station broadcasting in 3.0 by the end of this year. At this point, none of the gray stations have transitioned. They're starting in larger markets where we're not located. In time, we'll start transitioning our stations to 3.0 as well. That's probably more of a 5 to 7 year period where we will start to see the payoff of 3.0, and so that's the next big driver here. It will give you addressable ads just like anything else on digital, the return path, accessibility, and then again the ability to use your spectrum as to lay off parts of the internet, whether you're providing traffic distribution for Netflix, for Hulu, for Apple TV. For Apple as they send out a new update, or just for generic B2B applications like automated, autonomous vehicles and other massive data demands that the Internet of Things is going to provide.
Well, it sounds very exciting. The industry a few years back went through a complicated sale of broadcast spectrum. Do you feel that there will be a pressing need for the tech companies to seek additional spectrum? And do you believe that there will be opportunities to sell spectrum at some point again?
And I don't think any of us are counting on another broadcast auction conducted by the government. That was insanely complicated. It clearly did not meet any of the expectations. Whether you're in favor of the auction or not in favor of the auction. Some folks have talked for many years about simply allowing the private market to solve the issue. And again, that's a highly political decision. We see that not just in broadcast, but satellite spectrum, et cetera. If the private market can sell their license to someone else who can use it more efficiently and do so more efficiently, more quickly, get the government out of the way, it's the fastest way to redeploy spectrum. So if there's a need for added spectrum for non-broadcasters in our space, the efficient way of doing that would be to allow broadcasters to stop broadcasting video programming. Right? Our licenses require that we provide at least one stream of video programming. Do away with that rule, and broadcasters could simply turn their license and sell their license to a Verizon, lease their content to a T-Mobile, or come up with some ingenious operation with YouTube. But that legacy rule that goes back many years now, it prevents broadcasters from engaging, from privately selling their spectrum to non-broadcasters, and that seems to be the fastest and most efficient solution. I'm not hearing anybody talk about that as a near-term possibility, because there does not seem to be sort of great demand at this point.
Right, and since you brought up a little bit about the politics of everything, the political advertising has been a great revenue growth story and a great engine for the company. And it seems like political dollars are coming in fast and furious. There was a fear that digital would be taking a bigger and bigger share. What are your thoughts on how you're performing relative to digital? And given your broader footprint, is there any color on how political dollars are being spent today?
Certainly, digital is taking a large share of political ad spending, but broadcast ad spending or broadcast political revenues are also going up tremendously. So I think it's a false choice to say that digital is eating our lunch or taking share from us. Digital ads are directed in a different way. It would be similar to saying broadcasters are taking money out of door-to-door canvassing. Money is being spent on broadcasting. It's not being spent on door-to-door canvassing. Does that mean that we're growing our share versus canvassing? I don't think anyone who runs a campaign thinks of this as a giant pie and they're moving money between digital versus broadcast versus outdoor canvassing versus barbecues versus candidate travel. At the end of the day, they're come up with a strategy that they think converts the undecided, gets people out to vote, raises money. They've got lots of goals and different tools to address different goals. So if broadcast advertising didn't work, you wouldn't see the type of demands that the political buyers are putting on broadcast. They know it works. They know it's important. So I'm not terribly concerned about ads going to digital, and remind you that every broadcaster also has their own apps and websites. And if you're a political advertiser, you tend to be a little more concerned about brand safe advertising. And if that's your concern, you don't want your ads for your candidate showing up on YouTube next to something inappropriate. Best solution is buy digital inventory from broadcasters, so your ads show up next to something that's not aligned with one party or otherwise inappropriate.
And industry deregulation has played an important role for the industry and stock prices, for that matter. How important is the election to the broadcast industry and the prospect of future deregulation? And what would you like to see from the next administration in terms of regulations or deregulations for the industry or for its competitors like big tech, for instance?
Yeah, so in mid-sized and small markets, we're operating under the same ownership rules, which are called one-to-one market, that were adopted in 1940. It is indefensible for anybody to claim that the 1940 media rules, we had 1940, we didn't even have TV stations. To think that those rules are applicable and serve the public interest today is just, it's foolish. And yet there's still plenty of people that want to make that argument. Some of those people are probably going to be on the FCC and other policymaking positions. It's just wrong. The media market is very different than it was 5 years ago, let alone where it was before World War II. So what the government should do is recognize that we are competing against Google and Facebook, Instagram and TikTok, and let us compete without both of our hands tied behind our back. Despite where the rules are, again, Gray has grown from it's grown pretty dramatically, as have other broadcasters, but we're nowhere, we're still a highly fragmented industry subject to archaic rules, competing against companies, 3 or 4 or 5 companies that obviously dwarf what we do. Even AT&T's revenues in 1 week are more than the entire broadcast industry for the year. So, everywhere we turn, we're competing against Goliath. We have politicians and policymakers, and frankly, in both parties, who have done nothing to respond to that, and then are surprised why there's big tech companies with so much power, and not in a complete lack of a local presence and local jobs. My hope would be that whoever wins the next election puts in people that realize that this is going to be 2021 and this is not 1941. But I am not hopeful that's going to happen.
We'll see what happens there. Gray is among the few companies that has a significant amount of opportunity to increase its size through acquisitions. You mentioned earlier you're currently at 24% of the nation's TV households, and the industry cap is at 39%. Do you feel that there are still larger deals that could be had, or should investors anticipate more smaller transactions? And then as the second part of the question, given the fact that private equity has entered the market, is it possible that Gray could be a seller rather than a buyer at this point?
At this point, there are basically 5 very large broadcast companies: Sinclair, Nexstar, Tegna Scripps, and of course Gray. Then there's a significant number of mid-tier players, and obviously lots of folks with much smaller mom and pop. We've said for many years we think that this industry will more slowly but eventually be like most other industries, whether it's airlines or hotels or telecom companies. There will wind up with a smaller number of very large companies and be some very small local operations that continue nevertheless. So there probably will be 3 or 4 very large companies. That, again, is taking much longer because of the politics of media business. So there will be another large transaction, my guess is, in the next 12 months. Right now, people are collecting their political dollars. We're going through a recession and a pandemic and great political uncertainty. But a year from now, one of them, so likely that there will be significant multi-billion-dollar transactions occurring. involving at least one of the parties I just mentioned, and and then sort of next tier of broadcasters, which includes Graham, Meredith, um, Hearst, and many others. So yes, there will continue to be consolidation in this industry. There has to continue to be consolidation in this industry. Economics requires economies of scale, and so we'll continue to see it. Gray we've stated many times that we anticipate being one of the last people standing. That is the business plan. That's what the board is committed to, being one of the last broadcasters.
Great. The company seemed to have weathered, and since you mentioned the pandemic, and it seemed like you weathered the COVID crisis better than many in the industry. Were there any important key takeaways that the company has learned from the crisis? Changes in operating strategies, things that may be more permanent in nature in terms of cost reductions and things like that? And just it's a general question, I know, but just to give you an opportunity to chat a little bit about how COVID has impacted the company.
Jim?
You're correct in that I think on a relative scale, we have fared better than some of our peers. And we attribute that first and foremost to the strength of each local station with a very high number of number one stations and or very strong number two stations. And whenever there is an economic contraction, the number one and number two stations in a market fare much better. And so that's first and foremost why our performance has been holding up. Operationally, we haven't done anything significant. We have saved some costs naturally, but we have not furloughed. We have not asked for salary reductions. We have not laid off people. Going back to my very first comments, we have taken the long-term approach to this. Our operational tempo at each station has been well in excess of 100% for 6+ months now, covering the pandemic, covering protests, covering riots. So we're positioning ourselves to come out very strong on the far end of this. And as we said in our second quarter call, not all that long ago, we were relatively pleased with our second quarter results. We saw continuing improvement during the third quarter, which we'll comment on more when we get to our third quarter earnings call. So we're again, because of the strength of the stations, which is what the whole company is built around, we feel relatively good about where we are given the pandemic.
And there's been a significant increase in viewership, as you alluded to, given the stay-at-home mandates. Is there some thought about how much of those ratings bump you might be able to keep or monetize as we move forward to more normalized levels?
You're right that especially during second quarter when there was basically a countrywide lockdown, ratings did go to soared through the roof. That has come back down a little bit, but that's not unexpected, although it's still generally higher than it would have been a year or 2 or 3 years ago. Given the current economic situation, it's a little harder right now to monetize those extra rating points simply because the demand side of the business is still coming back. But we do think we will hold on to some of those ratings, and as demand comes back, we will be positioned to monetize it better. And we also think that certainly during the pandemic, we got a lot more exposure to younger demos than we have ever had before. And we believe that some of those younger demos will stay with us as we merge through the pandemic and things get back to normal.
And finally, Gray has had some of the best performance in the industry in terms of revenues and cash flow margins, which on an adjusted EBITDA basis, I think were 34% in 2019. Is it solely due to having the number one or number two ranked stations in the market, or are there other Gray attributes, strategies that account for the favorable performance?
No, we'd attribute it to the fundamental strength of the stations, the quality of the portfolio that we have. Like I said, the traditionally, whether it's in good times or bad times, the number one or number two stations in the market tend to do proportionally better from a revenue perspective, gaining more share. A lot of it goes back to viewer loyalty that's built up with a number one station or a strong number two literally over decades. and that creates a stickiness with viewers that then translates into higher revenue shares. And it's to a large extent, the cost side of the business is relatively fixed. It takes about as much money for a number 1 station to put on a half hour of news as it does for a number 3 or 4 station to put on a half hour of news. But if you've got a higher revenue share because of the strength of the viewership, then you can drive that extra revenue right down to your bottom line, which allows you to outperform on an EBITDA basis.
Well, gentlemen, thank you for taking the time to be with us today in the informative interview. Greatly appreciate that. Thank you.
Thank you, Michael.
Thank you.
Thank you for joining us for this C-Suite interview, brought to you by Channelchek and Noble Capital Markets. Log into Channelchek or subscribe to our YouTube channel to get the full catalog of C-Suite interviews and virtual roadshow channelcasts. Register for Channelchek's no-cost premium content and receive notifications of new releases from both series. Again, thanks for joining us.